Our real estate investors had one goal, and that goal was income. And then the best way to produce that income, we felt, was debt funds. We found a really good debt fund. We built rather mature marketing system around it, top to bottom, and that we basically just stopped doing anything except that. We did our quarterly planning this year, and we have the least goals ever. When we're only doing a handful of things, we're just completely focused on it. And like I said, it's bearing out in the numbers. Every single month we break a record.
Hey everyone, welcome back to the Denver Real Estate Investing Podcast. I'm your host, Chris Lopez, and I have a special episode for today. We are not talking about Denver real estate specifically. Rather, today we'll be talking about our Property Llama Q2 2025 shareholder update. Now, for most quarters, we have done podcast video updates for it. And we always get great feedback. It leads to opportunities. So I wanted to just continue updating the community on what we're up to here at Property Llama. I'm joined by my co-host and also business partner at Property Llama, Richard McGirr. How are you, Richard?
I'm doing great, Chris. I hope everybody's doing well at home.
Yeah. All right. So here's what we're going to talk about today on our shareholder update. Richard, there we go. Thank you. So we're going to go high level now for our real shareholders, our actual equity shareholders in there. We're going to share out our detailed update with a lot more numbers and figures. We want to share the high level things on here because it leads to deal flow for us, leads to opportunities. Also, there's a lot of other real estate deal makers out there, a lot of entrepreneurs where we just enjoy talking about this. So we're going to go through 6 items today. The first is pivoting, surviving, and thriving. So this is a part reflection and part looking forward at what Property Llama is doing. The second is talking about having the right people on the bus. The third is systems and processes. The fourth is broad high-level update on our deals. And then 5, we have some really exciting national scale partnerships to share. And then we're going to end on what our second half 2025 priorities are. All right, so let's jump in the first one here on pivoting, surviving, and thriving. So we chose this topic because, Property Llama launched right as interest rates started, at their historic lows, started going up. So this
Impeccable
creates,
timing.
really... but in 2 perspectives, like one is like, oh, great, we're catching a market shift, which can be great, right?
Yeah.
Because, hey, we can catch the recovery here. But the other thing, market transitions are very tough times to navigate.
Yeah.
And something that real estate keeps reminding me on is it's always slower moving than I think it is, right?
Yes.
It just takes a while for the market, especially real estate. We are not a fast moving industry. So, Richard, think back here. So we were launching in 2022 is, when we're really launching Property Llama and also, then very soon after that, Property Llama Capital. And so we had this really great opportunity and great idea out there. And where we're starting at was, we had the software application of Property Llama, which amazing piece of software. People love it. It's from a business standpoint, is a millionaire lead magnet.
Mm-hmm.
What's our stats on there, Richard? I mean, like our average user, what's their net worth on there that we see on the equity?
In property alone, it's just over $1 million in net worth. Yeah. And that's equity in the properties. That's not the portfolio value. That's actual equity, not even including their primary.
Yeah. And not everyone uploads all their properties. And of course, we don't know what other assets they have on there. So from a business standpoint, like, wow, this is just, it's a gold mine for connecting with other people out there. And, our thesis is that there's, like 2008, there's a huge wealth transfer. Well, it's not next market cycle. There's this huge wealth transfer of active landlords, people like me, Richard, and many people listening to the show right now, going from an active landlord more to a passive type of investing.
Yeah, a lot of people call another word for that is rotation in financial markets. And if you can get ahead of a big rotation like that, it's really, really good and you can make a lot of money. I mean, that's when you have like a bunch of equity like people have in single family homes. And we have a view that a lot of that equity is going to be moving into passive investments and that is bearing out in the data.
Yeah. Like so far, that is where everything is going. Again, slower than I think we anticipated and many other people in the market anticipated as well. So great market opportunity out there. And then, but here's a problem with software, right? If you guys have followed all these software companies, they can be a multi-billion-dollar company but negative cash flowing, right?
Yes.
And it's hard to run a business on negative cash flow. And as real estate guys, we're cash flow focused, right? So we've always had this dichotomy, like, hey, we gotta get to cash flow focus out there.
Well, and also because both of us were bootstrappers in our previous career. We both built multiple businesses, and we built these businesses without taking on funding. Now, in this case, we did, but that we still had a bias, even from day one, of we have to get to like at least cash flow break even as soon as possible.
Yeah. And compared to tech VC funding, our funding was very, very, very modest and very, very fractional. Oh, cool! This company just raised $100 million. Yeah, we had a lot fewer zeros than that. Mm-hmm. But we had that bootstrap mentality because that's where we came from. And obviously, for the money we put in, our shareholders, we value every dollar. We care about making every dollar work for us, our investors, and getting ultimately a return on there. So we made a very intentional pivot. I think a little over a year ago in the strategy, where it's very easy to get caught up in making, really cool features, right? And hey, we got to add this feature and do this feature in the software and this and this and this. We've seen that in our own business and many other business models out there. Here's the problem though. Features don't necessarily lead to revenue. And it became very clear from almost day one, all of our PL users were like, all right, I get it, guys. I have a red light ROE portfolio. I have a low red light return equity portfolios. I understand that. What the hell do I do with this instead? Don't just point out the problem. Help me figure out a solution. And so this has really made a big pivot, and not just, oh, great, more features, kind of just points out more nuances and more the pain points. And Richard, we really started focusing on providing solutions.
Yeah. So like we mentioned, we are big believers in this rotation into passive investing, except the thing is that there's many, many kinds of passive options out there. And so, I'd say we spent about 2.5 years experimenting with different types of deals. We tried 1031 options because we're like, oh, do people really care about tax efficiency? Oh, people really care about this, or people really care about this. And that the only way to figure out what people want is to cycle through lots of options, and I would say lately, I don't know how much we want to give it away here. We've really found what seems to be what landlords want to get into when they get out of their rentals.
Yeah. Well, yeah, and part of it too is here we, hey, go back in time. I think we would save 6 months in looking at 1031 stuff and how can you 1031 the passive stuff, and that just becomes hey, do people want it? Yes. Compliance and deal structuring, it's about a 0.1%, building and doing, so and also being very difficult.
Yeah, and the other thing is that from the investor side, a lot has to go right. They have to be able to sell their property, and then we ended up getting a lot of people saying yes, I really want to do this. The deal's lined up. And then we all know what's happening in the Denver market this year. Inventory is exploding, but the properties aren't moving. And so if that was where you thought the equity was going to come from, you had to make other plans.
So kind of taking back the macro level here, we want to kind of share some PL story and also really emphasize, hey, we have other entrepreneurs out there, a lot of our listeners and, investors around Denver, they're fellow entrepreneurs and business owners, right? You have to go out there and be willing to pivot and then go on there and, hey, make sure you got to pay the bills. You got to bring in cash flow today throughout the market cycles, the market changes, so you can go out there and thrive. Now, I would say, I'm always knocking on wood on here, but we have, we pivoted a couple times. We've gone through survival, and now we're in the, the early stages of thriving in terms of business. And this brings us to the second agenda item today. And a big part of that too is having the right people on the bus. I forget, I'm drawing a blank on the book name.
Good to Great.
On Good to Great. Thank you.
Yeah.
That is a classic book. 25, 30 years ago.
Yeah.
But when I read it, the biggest thing that stuck away with me is the author talked about how these, mega successful businesses really focus on having the right people on the bus. Now, in tough real estate times, and also us being, a startup company, it's a fast moving company. And also we are changing a lot with the market environment. And so it's hard to find people that can adapt that fast. And that's something for me as an entrepreneur. I've continued to learn that lesson where just because I can live in chaos, Richard can live in chaos, and we're used to it.
And can delay gratification for a long time.
Yes. Most people are not. And so a lot of people kind of get proverbial whiplash, right? And so it's hard to find people that can move at the speed we are. And then plus, as we're pivoting, we're like, oh, we need a different skill set, or hey, no longer focus on this, or hey, part of the philosophy is, hire fast and fire fast is something to get the wrong person on the bus. But I mean, Richard, we keep saying this in our, management calls, you mean Alona, we have gotten the right people on the bus so far.
Yeah, I totally feel that way. And I would also caveat the other thing that we say in our management calls and team calls is that we have very intentionally structured this business to be a very small headcount company.
And small but mighty.
Yeah, small but mighty. And the reasons for that is that we believe that we have an extremely scalable kind of revenue model. Like we believe that we could handle 3 times the AUM without having to hire. And then if we were to then hire like an extra salesperson or an extra fund admin person, we'd be able to handle like 15 times the AUM. But what does that require is like highly skilled professionals in each seat.
Yeah. So just big shout out to the key players on her. Jules, Matt, Christy, Katie, thank you guys. Thank you guys, Elaine, so much for, the team, being on the team. I'm sure you probably got a little whiplash as the buses, we slammed the accelerator, hit the brake, but you guys are awesome to ride with us. And also everyone is just executing, like doing very well. Like I'm doing my job. Richard's doing his job. The team's doing their job. And we're all just having like, if you guys have been in a company like that before, or I like to use sports metaphors, like when like your sports team is just like in the flow or clicking. And it's like, oh, I'm running here. I throw a pass. Richard's just there, knows to catch it. Like,
well, and I knew Richard's going to be there. Like, you're going to throw the ball and the guy's going to be there. Like, because you can absolutely sense my mind. Yeah.
Yeah. So we have the right people on the bus. So that is a very important thing that we're excited for. And I think is also just a huge milestone for any business out there, especially as you want to scale from, our intent from day one was to build a big business, but with, a small but mighty team, and not being that like self-employed trap where, hey, the business cannot run without like me or Richard or whatever doing day-to-day firefighting capabilities. All right. The next one that kind of pairs with this is systems and processes. Now, Richard, systems as flows, text, all this. This is definitely a lot more your wheelhouse. Like tell the audience about how well we're executing here.
I mean, I think we're executing like we never have, and that absolutely breaks out when you look at the numbers. Like before this call, we prepped a chart of our like amount of money raised every month. And it's like a very clear up and to the right. And we've been basically up and to the right since third quarter of last year, or fourth is when really things have like, one, it was getting some really good months, which we had in Q4. And then this year has been all about like every single month breaks the record of the last month continuously, which means we are jamming. Except I think the takeaway here is not that we developed these incredibly sophisticated management systems. Like this is going to be a big surprise to the people listening. What we actually did was like completely cut like 2/3 of the functions in the company. And that's because, we were referring to earlier, we've been experimenting with a lot of customer acquisition channels, experimenting with a lot of different products, et cetera. And what we really found was that our real estate investors had one goal, and that goal was income. And then the best way to produce that income, we felt, was debt funds. We found a really good debt fund, Dynamo Capital, shout out. We built a rather mature marketing system around it, top to bottom. And that like we basically just stopped doing anything except that. And that what that enables us to do is like when you take, instead of all of our management brain power being on like 5 things each, so there's like 15 priorities in the company, we did our quarterly planning this year and we have the least goals ever. And that's really great because we're all focused on the same goal. And it's not like we even have like, okay, a 15x increase in power because there's one goal. Like imagine all the switching costs, imagine all the management we have to say of like, what's the status of this and what's the status of this and making sure it's all lined up. When we're only doing a handful of things, it means that we're just completely focused on it. And like I said, it's bearing out in the numbers. Every single month we break a record.
All right. So Rich, let's go on to the next slide here, our next agenda item. And this is, at the core of it, deal updates. And this is something that, we're all very proud of. We're all very excited of, because at the end of the day, like, my personal theory, I've done a lot of podcasting, a lot of deal making, lots of other stuff is like, you got to be at the deal level. If you want to be a great real estate company, whether it's brokerage or fund management, whatever it is, like you got to be in the trenches of making deals. Because once you get too far away from it, you become the guru. And the guru is not where we want to be. And that's also where I think you don't do a good service to your investors out there. And, a big part of our success has just been from the community we have here in Denver. And I think we do that by good education, bringing in, hey, what's working in the Denver market, what's making sense on here. So we appreciate the community, lots of gratitude on there. But we always say, hey, we got to stay, hey, what deals make sense in the market? What deals can we structure? What deals can we provide that win-win-win structure for our LPs, us, our sponsor partners? How can we go out there and do really good deals? Now, before we get into specifics of some, obviously, like deal making the last couple of years has been challenging, is the best four-letter word I can use. It's been challenging out there to go do it, but I'm very proud of the team, of the deals we have structured. Because so far they're all performing, very well to extremely well. And where I talk to a lot of LPs and other investors and other sponsors out there, and there's a lot of blood in the water in terms of not just deals like pausing the distributions, but deals having big capital calls, deals going to zero, deals returning half their capital. Like it is a bloodbath out there. And we feel very fortunate for, hey, the sponsors that return to partners. Now, of course, hey, the handful of deals we've done, we've looked at, 10x more of those types of deals. It's always that deal funnel, right? Hey, find one good deal. Hey, we looked at, 10 or 20 good ones. And so we're very proud of that from a company level, because that's how, hey, we are fiduciaries. We got to provide good deals. We love doing deals. And these are all deals that we're excited to invest in ourselves. So, Richard, I know I went on a rant there. Anything you want to talk about in there? And also, I know probably want to talk about the debt fund as well on there as well.
Yeah. So I would say we should start with our first deal ever, which was Verco 3 / PL Verco 2. That's going extremely well as things have borne out. The Des Moines market, which is where most of the portfolio is held, is I think it's like the fastest growing metro in the U.S., I believe.
At least in the Midwest, I think.
Yeah, in the Midwest.
In the Midwest, it is.
Yeah, the fastest growing metro in the Midwest. Obviously, we were ahead of that. And as that trend has borne out, what it's also brought is a lot more institutional attention having a ranking like that, which means a lot more demand for the assets. Cap rates compress. We bought these assets at the old cap rates. They re-rate. And I think that fund is poised to deliver some excellent returns. Which obviously I'm happy for us, but more than happy for our LPs.
Well, one example on there, one of the projects in there, 100-some unit apartment building out there, went to market about 2 months ago. They had like 9 LOIs on there, which is, absurd right now, right? Hey, 5 years ago, that was normal. Now that's absurd. They got under contract. And I believe it was on that deal, the one under contract, like the earnest money went hard in the first week. And you don't hear about earnest money going hard anymore because that was a thing in the past. But the fact that it was such a good asset, good market timing on there, and a lot of buyer demand on there, we're able to get a price higher than expected and also get the buyer to go hard EM on there as well.
Yeah, because you don't, again, you don't want to be buying in hot markets. You want to own hot markets before they become hot. And that's what, with us and our partners, we were able to engineer here. Very proud of it.
Yeah.
So some other stuff that we've done is we can talk about the Narrate deals. 3600 South Ivanhoe closed. I believe that they are on their way to getting their rezone. Already have some very solid interest from various builders on the land because that's a entitlement and land play. That's looking good. Probably going to hit the pro forma, and the pro forma was great. We were forecasting like a 30 IRR on there. That's going well. The next one is the Narrate 3-pack. I believe you have the updates on which one of those are about to go vertical. I think that they've found the equity partner on a handful of those, right?
Yeah, the one in Wash Park. And so again, a reason we like this deal a lot was just, location. One of the deals in there was a covered land play, an old multifamily building in a great location in Wash Park. Obviously, for our Denver listeners, Wash Park is one of the most desirable neighborhoods in Denver. And so they are just in the final stage of getting things done and then getting their vertical LP. So that is, hey, the big check writer. that comes in and kind of brings, the bulk of the money to actually go, hey, let's start construction, start going vertical on there. I think that was, expected to close and ink the deal this month in August. And allow really good progress on the two projects down south in Colorado Springs as well, where they'll be starting vertical construction, not in August, but they're negotiating the final partners, LP partners, strong interest on there as well. And they're all in great position in terms of like where they are in the process, debt coverage and things like that. So, hey, we can be opportunistic on the right partner on there. But I mean, they're all moving forward, very well right now.
Yeah.
And I think the last deal we'll talk about, or actually the second last deal we'll talk about is, we just closed out a fundraise for a big build to rent project in Ohio. So this is 200 single family homes. So basically horizontal multifamily across single family homes. And so I love this trend right now because it's, class A single family home multifamily, which is filling a huge need of a lack of housing out there now. But I mean, that thing closed at the end of April. I mean, 2 or 3 months after it closed, they got an unsolicited offer from a private equity group saying, hey, we are interested in buying this once you get the certificate of occupancy, the CO, which could be around the 24 to 30 month mark. And that could cut the business plan in half, from 4 to 5 years down to 2 or 3 years.
And also
still achieve.
You have a buyer, it's going to happen at this point.
Yeah. And it's still going to achieve the same IR. Now they are actively negotiating back and forth, terms and price, but they're getting pretty close to finalizing the deal. And whether that actually comes through or not, hey, hopefully it does. If it doesn't, it just shows that what strong interest there is in that market segment. And also just our partner Red River on there, just, what a good job they're doing in terms of executing on the projects.
Yeah. And I would say the good news for investors here is you did not miss out, because you may be like, oh man, that was a home run. Because I mean, if this pans out like we're thinking it will, it's absolutely a home run deal. We will be having another build to rent community from the same developer towards the end of this year. So you have not missed out. So if you missed the bus on this one, there's another one around the corner.
Yeah. If you just like talking deals, we want to explore, again, we love doing deals. We love talking about this, and we could spend 5 hours talking about this, but we'll spend a couple more minutes. Last but not least, Richard, update on our Dynamo Capital debt fund.
So Dynamo is just absolutely slaying right now from every conceivable angle. I would say number one, returns, which are obviously the most important for our listeners here. Our SPV, which has between 10 and 24% better economics for the LP than going direct, we're tracking at basically a hair under 24% annualized year to date in cash. This is income. This is not equity. This is income in cash, which investors love, as I was mentioning earlier. Also, our ability to, move that product and get people into the fund. We were for a while the exclusive way to get into the deal, because the reason that Dynamo likes working with us is that we're able to bring a consistent flow every month versus the other groups they're talking to are like, hey, I'll give you $10 million. Well, that creates a sources and uses problem for them in terms of I have to go find $10 million or $30 million worth of loans. So that is just the investor demand is there, which is not, surprising at all, because the returns have just been great. And I would say on kind of a company metrics point of view, intuitively feels like between a third and a half of our LPs who invest in that deal approximately double their position within 3 months of being in the fund, which obviously from our point of view is fantastic. In fact, about 66% or more of the capital we raise on a monthly basis for that fund are repeat investors who are already in the fund and wanting to invest more. So they're obviously very happy LPs, great deal and a great partner.
And kind of taking a step back here from the deal update specifics, this really goes in line with our thesis out there, where we can go out there and find, great operators, and then we can bring capital and scale, right? A lot of these operators are kind of sub-institutional in terms of their products or quality, who they're selling to. But, we've been able to bring, systems and tech scale along with able to bring capital. So it's good for the sponsor, and we're really get really unique. And I think really good, risk adjusted return type deals. Cause these are not deals that, hey, the average investor will be able to find, nor will the average investor say, hey, here's $50,000 getting this deal. Most hey, Are we talking seven figures? Great. Bring me 7-figure checks. So us by bundling money has been great for them, great for our investors, which ultimately, hey, we have to do what's right by our investors first. And of course, by able to structure those deals, that's good for us, a business model. Now, we've got a couple more deals coming in the pipeline that we'll be announcing more. But as always, we love to help investors get into deals to optimize their portfolio, whether you're doing passive deals. We still do a lot of active deals in Denver. And we're always out there looking for deal flow. I mean, all these deals we've structured have come from our network. They've come from networking, not us going on, some website and just, cold calling sponsors, anything like that. It has come through just networking. And obviously then we're vetting and doing due diligence on our side. So if you're interested in deals or have deals or sponsors, we would love to continue the conversation. All right. So the next update here is some really exciting, partnership updates. So before we get into specifics on here, I'm going to kind of loop back to our first one we talked about pivoting, surviving, and thriving. So when we first launched Property Llama app, as Richard talked about, as a millionaire, lead magnet, we had, no problem attracting, successful investors in the platform, which is what every business wants, right? Hey, we want a highly qualified customer in there. But the thing was, a lot of these people had, they were nationwide. We started expanding outside of Colorado, and we just had poor product market fit in terms some of the early on, especially the 1 or 2 Denver deals we had, not strong appetite for investors nationwide. And also we didn't have the affinity. We didn't have the brand goodwill like we do with here investors in Colorado where, hey, a lot of our investors, I've had coffee, I've had beer with them. We've bought properties. We've done deals in the past together.
Well, and that's why we do local events is we need to have personal relationships with people in order for them to do deals with us. That's actually something we've learned is pretty much a requirement in this business is very high trust and a strong relationship with every single LP, even if they're just a $50,000 LP. And I don't mean just 50,000 is a lot of money.
Yeah. And so we very much, focus on quality over quantity. And we said, all right, we're getting lots of people in the system, but at the end of the day, we are not having conversion on, the business standpoint. So we stopped focusing on national traffic and just hyper focused here on Colorado, among other, pivots we did here. But we really focused on, hey, we got an amazing Colorado community here, and let's just execute well on here, because even if we never expand outside a 15-mile radius in Denver, we can still build a billion-dollar company.
Yeah.
And we're like, hey, we're going to execute here. We're going to really fine tune the business plan. And then we will organically be able to go out there and do some nationwide scale when the time is right in terms of the right scale partnerships and when we are ready. And then, I don't want to say we're lucky because we did a lot of hard work and then, that we meet opportunity. And then Richard, you had a really exciting opportunity come across your desk.
Well, before I say that, I just want to say that I remember when we did 3-year company goals planning 3 years ago, and we said national media presence through major national channels. And that here we are 3 years later. And so my big news, so we both have big news, but my big news is that I have been named the host of Unlimited Capital on the Best Ever CRE Network. As you guys know, Best Ever conferences, I think it's the mecca of syndication conferences. That's really not underselling it at all, actually. Everybody who's in the syndication game, because one of the really early leaders there was Joe Fairless, who just kind of gave away the playbook, to everybody. And so my show on there, as you could probably guess, is about capital raising, because that's something that I'm extremely passionate about and I can talk about all day, and the mechanics of sales and marketing and everything like that. And so my show is every Monday on the Best Ever CRE show. It's a daily show. My show comes out Mondays. Yeah. And also I'll be doing a workshop the day before the next conference. I believe it's March 2026.
I have no idea. It's sometime in March 2026.
Yeah.
Which hey, this is a huge honor. And part of it too was, hey, it's best to partner with someone for media exposure versus us hey, in Denver, we built that from the ground up. To build that nationally is very hard to do. And of course, hey, Denver, I've got years and years and years of hard work and meetings and classes and coffees and happy hours where I just be able to, meet people. And so, we were very much, hey, how can we go out there and start partnering? And based on our success, we're able to start, attracting those types of opportunities.
I actually have a funny thing that I just thought of. Okay, so everybody knows the phrase OPM, right? As the best way to learn is other people's money. Well, guess what OPM also stands for is other people's media.
Yeah.
And so that's like absolutely what we did here. And part of that is that it's extraordinarily expensive in either time or money, if not both, to build a national audience. So the hack for that is like, how do you get on a channel that's already built and established? Like that is clearly the risk adjusted way to do this, and also the fastest way to get a result.
Yeah. And then my exciting news on there, and it's amazing how things come in waves, right? So right around a month or so after we kind of got the best ever stuff, wheels in motion, I had an amazing opportunity to come up with Passive Pockets, which is, Bigger Pockets, new like sub brand, really focused on the advanced investor, the LP investor. And now I am, an official co-host, with the target of becoming like the main host on there. And so it's great from like a PR standpoint, but for me, like it's more deal making, right? I get to look at more deals. I talk to more operators. I go out there and I also learn from other investors. So it just adds a lot more exposure out there and also creates a lot more opportunities for us. And also, for Property Llama in general.
Well, yeah. And I had a guy I interviewed 3 weeks ago email this morning saying, "Hey, I want to do a deal with you." Yeah, amazing.
And that's what it is. You go out there, provide education, provide good value. It attracts partnerships, opportunities, investors, sponsors, and that is like our whole name of the game. All right, so I know we're running long here, Richard. Let's go on to our last agenda item here, which is our priorities for the second half of 2025. And Richard, I talked about, we every quarter we call them 90-day rocks. Now we got this from the EOS management system, which we have taken some from on there. And so our quarterly goals always start 1 month after the quarterly calendar. So we don't set goals, starting July 1st, which is start Q3. Our goals start like the end of August beginning of August 1. And we did that for two reasons. One is we have a lot of like fund reporting to do at the end of the quarter. So it helps offset that from just like, hey, that a lot of work, comes on there. But most importantly, and this was a huge strategic thing we did, is there's a big problem when your quarterly goals ends December 31st. You had just hit that holiday lag. Momentum kills because everyone's, out doing family stuff, out doing holiday stuff.
Yeah.
And then so you kind of end the quarter on a fizzle and they're like, all right, then January 10th, everyone's back in the mode doing, all right, what are we doing this quarter? So we started doing things, where, hey, that would now end January 31. So we get to overlap there, which has been really great from a planning standpoint, but most importantly from a momentum standpoint as well. We don't lose momentum at the end of the year. And so we just got finished, we just finished our Q3 planning, started in August 1. And, we set like strategic goals and 90-day goals on there as well. And we have, as Richard said, the fewest amount of rocks we've ever had in company history, but also I'd say the most important. And the theme on there is it's execute on what's working.
Yes.
I don't say beyond that.
Yeah, and we got to give a big shout out to my main man, Alex from Mosey Nation. He's just like, if you are a small business, you want to chase every squirrel because you are an entrepreneur, and that's what entrepreneurs love. They love novelty, and they're optimistic people, and they're innovators, and they want to do all this stuff. But the reality of business is that once you find something that's working, you just need to do more of that. And then as a distant second, you need to do more of that better. And then absolutely out of the ballpark is doing new things. And so these goals are just about, like, we just want to raise more capital through the channels that are currently working into the products that sell well. That's also a huge advantage because it means that we're actually able to like develop mature marketing systems around this product, because this is all we're doing, and train the team better, because everybody is just like, hey guys, we're doing like 3 things in this company and we're just going to do a lot of it extremely well.
So what on that note, but just, a big thank you to our team members out there, a big thank you to our shareholders, and a big thank you to our community here, and a big thank you to our partners out there. Like, it's just all these individuals, all these right people, come together, find the right cylinders. We have tons of gratitude for everyone out there. We're very optimistic on where things are going. And also, like, we love talking deals. We also love talking business. So if anything we talked about on here has inspired ideas or questions, reach out to us. Like, every time we do one of these, it always spurs a half dozen conversations, sometimes just to come talk business, or hey, I got this investment idea, or I'm trying to figure out what to do this property here. Whatever it is, if anything in here resonated with you, please reach out to me. Please reach out to Richard. I think you know how to find us, Chris or Richard at propertyllama.com. We love talking shop, whether it's, deals or business. We love it. We're in it to win it. And we are excited to bring you the Q3 update here in a few months as well.
Absolutely.
All right, everyone. Richard, thank you for your time. Everyone out there, we will see you real soon. Bye-bye.
See you guys.